Hey, what's up, folks? Welcome back to another episode of InvestStream. I'm Pankaj, and today I'm going to talk a little bit about pitching when you're in a market that is different from your home market. So, if you are talking to investors that are based in a different country than your home country, what are some of the things that you may want to take into account? Coming up next. All right, folks, so this is going to be a relatively quick one, I hope. What are some of the things that you need to think about if you are pitching investors from a different geography, from a different market than your home market? And this is happening more and more. You're starting to see more and more investors going global, investing in different markets than their home market, and a lot of startups looking at international markets and focusing on markets that are not their primary home market. So, this is for early stage companies. This is not necessarily the same for late stage Series B, C companies. This is really pre-Series A companies when you're raising your first or second round in relatively smaller amounts. So what are some of the things that you want to take into account? One of the things that you want to take into account is what is true in your market may not necessarily be true in the market of the investor that you're pitching. So they may not have as much insight into what you're thinking and how you're executing in your market because it's different in their market, right? And if you are targeting their market as potentially an expansion, one of the things that you want to do before you get into the whole thing is really understand their market, understand their way of thinking, so that when you're pitching them, you can frame the differences in a way that they can understand them and they can relate to them, and at the same time appreciate the differences and perhaps see opportunity in those differences, right? So that's a really important thing that you want to do. Another thing that I would recommend is really taking the time to understand what kinds of companies the investor has invested in before that are not in their market, ideally that are in your market, in your geography. Perhaps reach out to some of those founders and get some ideas and tips from them on what are some of the things that they care about. And the reason I suggest this is I've invested in companies in many, many parts of the world, the Middle East, India, of course, the rest of South Asia, Europe, and of course the US. So there's a lot of differences that pop up. And sometimes if you are perhaps pitching an investor that is investing in the Middle East for the first time, they may not necessarily have all the information and nuanced cultural things that you have because you're based there. But even within the Middle East, there are cultural differences when you cross borders, right? So sometimes it could be slight variations in language, other times it's cultural, but sometimes, for example, investors in the US want to see growth above all else, right? And they're willing to fund growth because they figure if you can reach a certain scale, monetization will not be a problem. And that's generally true in places like the US and more mature markets. But that could be a little bit of a challenge in markets that are less developed, startup markets. So, for example, in a market like India until recently, and when I say recently, I mean at least 6-7 years, a lot of early stage investors wanted to talk about profitability and cash flow, and they would take large pieces of equity in the first round. I remember, way back in 2012 when we saw some investors from Silicon Valley coming to India for the first time, not to invest, but really to explore the market. A lot of them were shocked at the amount of equity that founders were giving up for relatively small amounts of equity. And it made sense for India, it didn't make sense for Silicon Valley. So those Silicon Valley investors really weren't able to put India into their context. It took time for them to really appreciate the Indian context and allow decisions to be made based on the Indian context rather than their own Silicon Valley lens. I see the same things here in the Middle East as well, where you have a significant emphasis on cash flow and profitability from the investor's perspective. They want to see where is money going to be made. They want to know how that money is going to be spent, and less focus on the longer term big vision, and not because they don't care about it, but because they're cognizant of some of the challenges that exist in the Middle East market, and hence their focus is a little bit more on what the market can digest and understand, which is cash flow and making money. So I really hope this was helpful for you. I didn't want to dive into too many specific details. I'd rather do that if you're asking questions and kind of do it on a one-on-one basis. But if you have suggestions or comments or other differences that you've seen when you've pitched investors from a different market, or if you're an investor and there are things that you look for when you're investing in international companies, please share them in the comment section below. I would definitely love to hear them, and I'm sure a lot of other folks would as well. If you haven't yet subscribed to the channel, please hit the subscribe button, and don't forget to hit the little bell so you get notifications on every new episode that comes out. Thanks again for joining me, and I'll see you again next time.